All right, let's dive into this. Sammaan Capital Limited.
Sammaan Capital.
Yeah, formerly Indiabulls Housing Finance Limited.
Ah.
So,
Yeah.
maybe some listeners remember them as Indiabulls, but
hmm
big changes afoot.
Big changes. Yeah.
Yeah, you sent over this earnings report,
Yeah.
and I gotta say, it's a wild ride.
Yeah.
There's this name change, obviously a strategic shift, it seems.
hmm
And I think some really interesting stuff about what's going on in the Indian real estate market in here as well.
For sure. So we're looking for clues here.
Yeah.
Are they going to make it?
Yeah, are they setting themselves up for success, right?
Right.
So let's start with the financials, I guess, right?
Yeah. Yeah.
I mean, their operating profit is way up,
Okay.
1,525 crores for the first half of the year.
Okay.
But then they also took this massive hit, these fair market value provisions,
Yep.
over 4,000 crores.
Big adjustment.
It's almost like they're clearing out the
Yes.
cleaning house,
Before they move in.
you know.
Like they're trying to address everything all at once.
Yeah.
Like a big reset.
Totally.
But if you adjust for that one-time hit,
Right.
they're still showing growth.
Okay.
So the core business is performing.
So the underlying business is actually doing all right.
Yeah.
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 It's positive.
Okay, and speaking of cleaning house, right?
Okay.
They've been going after this legacy loan book.
Yeah, legacy book's interesting.
Yeah, and they recovered a record 5,053 crores. Huge. No new slippages,
Okay.
which means, those older loans aren't getting any worse.
That's crucial to
Yeah.
freeing up that capital.
Yeah, it's like they're taking that money,
Mhm.
using it to fund the new stuff.
Totally. Getting rid of the old to make way for the new.
Yeah.
Yeah.
And it seems like it's working.
Okay.
The NPAs, at least, are at like the lowest point in years.
Really?
Net worth is up.
Wow.
They're dishing out new retail loans,
Okay.
like over 1,000 crores a month, it looks like.
Strong. Yeah. Pretty strong.
Growth mode.
They're in growth mode for sure.
Like hitting the refresh button.
Yeah.
Embracing a new direction.
Totally. And speaking of new directions,
Yeah.
Sammaan Finserve Limited.
This is the subsidiary, right?
Yeah, the wholly owned subsidiary.
Really interesting.
It's like they spun this thing off to focus, like laser focus.
Laser focus, yeah.
Yeah.
Interesting.
SFL, right? Affordable Housing Finance.
Okay.
Totally different, right, than what Sammaan Capital.
Different market.
Yeah, those urban and prime individual housing loans and the MSME loans.
Yeah.
So it's really interesting how they're doing like this two-pronged approach.
Two-pronged, yeah.
Yeah, to tackle, I guess, different parts of the market.
Yeah. Makes a lot of sense given the affordable housing market.
Right, the potential there.
Huge.
Yeah.
So what are we seeing in terms of how they're doing it differently, though?
Yeah, well, for starters, the loan sizes,
Okay.
like way different.
Okay.
So SFL, average home loan size, like 15 lakhs. Sammaan Capital, we're talking like 30 lakhs.
Double.
Yeah, double.
Yeah. Makes sense.
Same with the loans to small businesses, right?
Mm-hmm.
SFL, much smaller loans.
So totally different customer profile.
Yeah, totally different.
Uh-oh.
Different risk appetites, I guess.
So are the yields different?
Oh, yeah, for sure.
Okay.
SFL, slightly higher yields.
Higher risk, higher reward.
Yeah, exactly.
Yeah.
Higher loan-to-value ratios, too.
Makes sense.
Totally different playing field.
So it's not just smaller loans, it's just a different way of doing business.
Different metrics.
Okay.
Yeah, risk assessments, the whole thing.
Like they've built two separate teams
Yeah.
with different playbooks.
Totally, yeah.
Interesting.
So Sammaan Capital, right? Urban professionals,
Okay.
business owners, higher credit scores.
Okay.
SFL, different demographic,
Right.
like service providers.
Okay.
Small manufacturers, maybe a bit lower credit scores.
So they've segmented the market
Yeah. And they're, I guess, like tailoring their approach.
to each segment.
Yeah.
So strategic separation is one of the key takeaways here, right?
Yeah, it's not just a name change.
Right.
Right. Two totally different entities.
Okay.
Different business models, different teams, different target markets.
Makes a lot of sense.
Now, here's where things get a little crazy.
Okay.
That legacy loan book,
Yeah.
Sammaan Capital bought a bunch of it from SFL.
What?
Yeah.
Why would they do that?
I know, right?
Yeah.
About 7,200 crores.
That seems counterintuitive.
It seems counterintuitive, but it's like this strategic consolidation, maybe.
Okay.
Bringing all the exposures under one roof.
Makes it easier to manage.
Maybe.
Potential.
And they did it by the book, right?
Okay.
Fair market value.
Good.
They brought in Deloitte,
Yeah.
BDO,
Oh, wow.
all the lawyers, the whole 9 yards.
No funny business.
No funny business.
Okay, but how do you even determine fair market value for a portfolio of old loans? It's not like you're buying a stock or something.
Totally. Well, it's a process.
Oh, okay.
So first, they looked at the riskiest loans in the portfolio,
Okay.
made provisions, set money aside, right?
To cover potential losses.
Yeah, like 1,700 cores.
Oh, wow.
Big chunk of change.
Significant.
Then, for the rest of the loans,
Okay.
they applied a discount.
To account for the age.
Yeah.
Right.
Older loans, they're not worth as much.
You got to factor in the risk,
Yeah, cost of capital, the liquidity.
interest rate changes, prepayments, all that stuff.
Totally.
Makes sense.
So that discount's kind of a cushion for Sammaan Capital, right?
Okay.
They're basically getting a deal.
Because of the age and the risk.
Yeah, but it's not just about the price.
Right.
This purchase lets them consolidate that exposure,
Okay.
potentially release some of those provisions.
If the loans perform well.
Yeah.
Yeah.
And it strengthens their capital position.
So it's a calculated risk
Yeah.
that seems to align with their strategy.
Yeah, they're acknowledging the past,
Right.
moving to the
But they're
future.
moving forward.
So cleaning up, streamlining,
Yep.
getting ready for growth.
Totally.
But that's just,
The tip of the iceberg.
the beginning.
Yeah.
There's a lot more to talk about with that legacy book rundown.
Yeah.
And how they're using that money, that freed up capital.
Right.
Yeah.
Yeah. It's like this financial Tetris,
Oh, I like that.
trying to get all the pieces in the right place.
Line them up.
So how are they managing this rundown of the legacy book?
Well, they're putting that money to work,
Okay.
funding that retail growth. Right?
Okay.
New home loans, more loans to small businesses.
Trying to take over the Indian housing finance.
Oh, they want to dominate.
Ambitious, especially with
Yeah.
how hot the Indian real estate market is, right?
Yeah, but they're not messing around.
Okay.
Cash collections from that legacy portfolio.
Yeah.
Record highs this year, 5,053 cores.
Huge number.
Plus, they've been selling off some assets.
Okay. What kind of assets are we talking about here?
So it's more about those non-performing assets they got a while back,
Okay.
making the most of it.
Okay.
Sold off a mall in Bangalore to a REIT for over 600 crores.
Okay.
Another mall and office complex near Delhi.
Wow.
That one went for over 1,000 crores.
Wow.
And get this, an office building and residential property in the same area.
Yeah.
Another 1,200 crores.
It's like monopoly, right?
Yeah.
Cashing in those properties.
Yeah, reinvesting in the core business.
So smart.
So all that money goes right into their retail AUM and the loan book,
Clever.
building a foundation for the future.
But what about the regulatory landscape, right?
Ooh, yeah.
That plays a big role.
Big role.
Any recent development.
All good news, actually.
Right? That's good.
Remember, they're trying to,
Yeah.
not be so reliant on that single promoter group.
Right. Depromoterization.
Depromoterization. Got the green light back in February 2023.
More flexibility.
Yeah, independence. Calling their own shots now.
That's huge.
And they passed their annual inspection.
Okay.
No problems.
That's good.
No penalties, nothing.
Clean bill of health.
Yeah, it's like getting,
Yeah.
a gold star.
Definitely.
And then they also got their certificates of registration
Crores.
for both
Sammaan Capital and
Sammaan Capital and Sammaan Finserve, yeah.
within the last year.
Yep.
So they're in the good graces of the regulators.
They're all set.
They're all set.
Yeah.
Financially sound, focused.
Uh-huh.
Regulators are happy, but it's a competitive market. Right?
Super competitive.
How are they standing out?
Well, it's all about this innovative funding model, right?
Yeah,
They're not
sure.
just doing traditional loans,
Right.
co-lending, sell-down arrangements.
Remind me what those are again.
So it's like they're teaming up
Okay.
with banks and other financial institutions,
To share the risk.
share the risk, access more capital,
Okay.
expand their reach more borrowers.
So a win-win for everyone involved.
Exactly.
But are they actually finding these partners?
Oh, yeah.
Okay.
10 different banks.
Wow.
And they've already given out over 4,282 cores
Through these arrangements.
just in the first half of this year.
Wow. A lot of trust from the market.
Yeah. They believe in what Sammaan Capital is doing,
It's a validation.
for sure. But, partnerships are only part of it.
Right. What about internally?
Yeah.
How are their operations?
They're embracing technology,
Okay.
streamlining everything.
Efficiency.
Better customer experience,
Digital applications, online account management, all that.
all of that.
So they're digital first.
Absolutely. But they're not forgetting about the people.
Right. Right. Talent is important.
Yeah, strong leadership team,
Okay.
experienced professionals, really trying to create this culture of innovation.
That's smart.
Yeah.
But we can't forget about the loan portfolio.
Yeah, that's the core, right?
The heart of the business.
How are they managing that?
How's the quality?
Well, they're not just giving out loans to anyone.
Okay, good.
Asset quality has improved dramatically.
Really?
Bad loans are stable, low,
Okay.
They've had high provision coverage, too.
To protect against losses.
Exactly, a nice buffer.
Smart.
And they're managing their assets and liabilities, too.
To make sure there's enough cash
Enough liquidity.
to meet their obligations.
Yep. All cylinders firing.
Sounds good, but we need to zoom out a little bit.
Okay.
Look at the bigger picture.
Yeah.
Indian real estate market.
What's going on there?
What's the outlook?
Get this. Incredibly positive.
Oh, interesting.
Yeah, all the research we looked at, super bullish on the market.
Wow, what's driving that?
Indian economy is doing well.
Okay.
Strong GDP growth.
Right.
Inflation's under control.
Yeah.
Consumer confidence is high.
People feel good.
Yeah, people are feeling good.
It's good for real estate.
Definitely.
But any specific indicators?
So housing sales are at record highs.
Wow.
Especially those higher-end properties.
Okay, so premium properties.
Yeah. It seems like everyone wants bigger houses, better lifestyles.
Nationwide trend.
Seems like it.
Okay.
Yeah. Sales for properties over 10 million INR.
Wow.
Through the roof.
So it's not just sales, it's the speed too, right?
Yeah, that quarters to sell.
Such yes.
The QTS, yeah.
How fast is that inventory moving?
Lower QTS, healthier market.
Right.
And even though there's a little bit more unsold inventory, the QTS is going down.
So demand is outpacing supply.
Yeah.
That's good.
And it's not just residential.
Okay.
Commercial is booming too.
Office space.
Especially office space, yeah.
Where's are driving that?
Global capability centers.
GCC.
The GCCs, right.
Okay.
Those specialized units set up by multinational companies.
Right, to tap into the Indian talent pool.
Exactly.
To keep costs down.
And guess which city is leading the way?
Bangalore.
Bangalore.
The tech hub.
Tech hub, yeah. Bengaluru's office market is on fire, thanks to all those GCCs.
But it's not just the multinationals, right?
No, Indian businesses are stepping up too.
Showing confidence in the market.
Yeah, so a healthy mix.
Domestic and international.
Yeah.
Good sign.
And rental market's reflecting that too.
Okay.
Rental growth is stable.
Across major cities.
Yeah, residential and commercial.
So strong economy, lots of sales, healthy rental growth.
Yeah.
Real estate market's looking good.
Looks great.
Sammaan Capital's in the right place.
They are.
At the right time.
Right place, right time.
But we got to zoom back in.
Okay.
Take a closer look.
Yeah.
At that retail loan book.
Okay.
How are those loans actually performing?
Yeah, that's what matters at the end of the day, right?
Right.
So they've got the market on their side, but what about, like, the individual loans?
Yeah, are people actually paying them back?
Yeah, that's got to be the ultimate test.
For sure, because a strong market can only carry you so far.
Exactly. If they're not careful with their underwriting,
yeah,
it could all fall apart.
Right. They can't just be handing out loans to anyone.
But it seems like they're being pretty diligent.
Okay, that's good.
Yeah, that retail loan book, strong performance.
Especially those sold down pools, right?
Yeah, the partners.
With those banks and mutual funds.
Right. So how are those loans doing?
Are the partners happy?
Seems like it.
Okay.
Delinquency rates are super low.
That's a good sign.
Yeah, people are paying their loans back on time.
So they're assessing risk properly.
Looks like it.
Finding those good borrowers.
And remember, they're not just selling these loans to anyone.
Right. They've got those 24 relationships.
24 banks and mutual funds.
Yeah, all wanting a piece of the action.
They're in high demand,
It's like a stamp of approval from the market.
Yeah, they trust Sammaan Capital.
To manage those loans.
You get it right.
Okay, but let's drill down a little bit more.
Okay.
What about those home loans and the loans against property?
The LAP loans.
How are those specifically performing?
Really, really well. Give me the numbers.
So, like, the percentage of loans that are past due, super low, for both the 90-plus days late and the ones even further behind.
Across all the pools.
Across the board, yeah, all their investors.
So they're maintaining those high standards.
Yeah, consistently.
Okay, so they've got the financials.
Yeah.
They've got a good strategy. The market's in their favor.
Yep.
And the loan book looks good.
They're doing a lot of things right.
It seems like they're on track.
Yeah, they're definitely on the right path.
But it's a transformation, right?
Huge transformation.
Big changes.
Always questions.
Yeah, what does the future hold?
Exactly, you never know.
What if the market shifts?
Right, what if some new competitor pops up?
Or they make a mistake?
Execution risk.
Yeah, there's always that risk.
It's a high-stakes game, for sure.
But that's what makes it interesting, right?
Keeps us on our toes.
We get to analyze the moves.
See what happens next.
Try to predict the outcome and figure out what it all means for Sammaan Capital.
Yeah, what's the end game?
Right, but let's take a step back for a second.
All right.
Big picture time.
I like it.
What stands out to you the most about this whole transformation?
I think it's that they're going after both ends of the market.
Okay.
Affordable housing, with Sammaan Finserve, and then those urban and prime segments with the main company.
Oh, so they're not putting all their eggs in one basket.
Exactly. It's smart.
It's like they're hedging their bets.
Yeah. Different parts of the market might perform differently.
And with demand rising across all those income levels, smart move.
Really smart.
But no strategy's perfect, right?
There are always going to be challenges.
Bumps in the road, unexpected stuff.
Can they adapt?
That's the question, right?
Do they have the right people in place?
The right culture.
To navigate those challenges?
Yeah, that's what determines success in the long run.
So as we wrap up this deep dive,
yeah,
I want to leave our listeners with a question.
Okay, hit me.
Given everything we've discussed, all their moves, the financials, their position in the market, do you think Sammaan Capital can really become a dominant force in Indian housing finance?
That's the million-dollar question.
It's a story that's still being written.
Yeah, we'll have to wait and see how it all plays out.
But for now, it's time to close the book on this deep dive.
Until next time, happy exploring.